Good afternoon, everyone, and welcome to the second RisCura in Conversation webinar. I'm Christine van der Meest, and I'm part of the RisCura UK team. Today, we will be exploring how investors can benefit from the power of the Chinese consumer. This webinar is part of a series of looking at different aspects of putting money to work in China. China is the second largest economy in the world, but it's hugely underrepresented in many investors' portfolios. It has been the global engine of growth. But what is different now is the power inside China has changed. Cheap production for the rest of the world, yes, but much more important, we now have local consumers. All these consumers want lifestyles similar to the West with consumer goods, better services, and higher quality products. But let me begin by introducing us and our speakers. For those who are less familiar with RisCura, we are an investment firm that specializes in emerging and frontier markets. Our mission is to use our specialist skills to guide investors across the world to access some of the fastest growing economies. We help with macro views, asset allocation, and source and put together portfolios of highly talented investment managers. The majority of RisCura's clients are institutions like pension funds or sovereign wealth funds, insurance companies, but we're also accessible to high net worth investors. Our clients have combined assets in excess of $250 billion. For today's webinar, we are joined by Jared Glansbeek, CIO and founder of RisCura, and Xiaogang Zhang, founder of Blue Creek Capital Management. Jared's journey to China goes back almost 20 years, starting with macro views covering China's importance for emerging markets, and then over the last 10 years or so, spearheading our in-country manager research and portfolio construction. Jared has personally made several trips to Hong Kong and mainland China, and he understands the asset management landscape and assists in shaping and directing our work in locating and allocating to highly skilled China-focused managers. It was on one of these trips that Jared met Xiaogang. Xiaogang is the founder and CIO of Blue Creek Capital Management. Before that, he was a partner in portfolio at Greenwood's Asset Management, where he managed over $2 billion, including funds on behalf of RisCura. This is where we got to know him, and it's a relationship that we are expecting to continue. Jared will start us off by spending a few minutes discussing US-China geopolitics, and then have a conversation with Xiaogang about the main topic today, the power of the Chinese consumer, the outlook for the Chinese consumer, and why we believe there is such a phenomenal opportunity to invest. Before I hand over to Jared, I just want to mention a few admin announcements. Firstly, this webinar is being recorded, and we will send out a link in the next few days for anybody who wants to replay it. Please feel free to ask questions. There'll be a chance after Jared and Xiaogang have finished that we can answer these questions. So you have the option of either to use the raise hand button on the bottom of your screen, or you can type in the question and I will hand them over to Jared or Xiaogang. Please use the chat also if you have any technical issues, and we will see if we can assist you. Over to Jared.
Thanks, Christine. Welcome, everyone. This is my first webinar, so I'm very happy, obviously very nervous, and what those of you that will know me will know I can talk very quickly, so I'm going to try and slow down, because this has to be one of the most interesting pieces or areas of research that we deal with. And when you deal with it at that level of intensity that we've tried to deal with it, actually it becomes more and more fascinating, and you start to understand that not everything is driven by geopolitics, and there are really, really interesting angles, and that you can only but be excited for Chinese stocks. So with that, bias out the way, what I'd like to do before I speak to Xiaogang is just talk about the macro and geopolitical environment. So the first thing to recognize is that obviously the world at the moment, and you don't want another one of those, so I won't even dwell. The world has been driven by COVID over the last few months, and the primary thing behind COVID, obviously there've been a whole lot of very specific things, but in our world, as participants in financial markets, the world has been driven by stimulus. That is the be-all and the end-all at this stage, and we're waiting for economies to catch up. But this is not a simple little story about stimulus. The stimulus has been huge. And you can just see on this graph, the US have really put a lot in. You're seeing Europe, Japan, most of the developed countries, a lot of EM countries, and in fact you can even see China to some degree there, and certainly levels far higher in general than post the GFC. And we obviously also still have some more stimulus coming from the US. Now, this is what has driven markets, and I want to get far more specific on China. So just before I get there, if we can just look at the next slide, what you can see is the stimulus has driven economies. If you just look at this, what you can see is you have the Fed's balance sheet increasing and markets rising. Fed's balance sheet increasing, markets rising, same thing throughout. Tax cuts by Trump were obviously quite stimulatory as well, but you see again in, let's call it QE4, you really have had strong market movements because money supply has just entered, or let's just say stimulus enters the market and forces prices up. So this has been a worldwide phenomenon, and you see it play out in all across all markets pretty much. Maybe a little bit less in EM, FM, but certainly in developed markets, lots of stimulus, and they have driven markets very strongly. Next slide, please. So the obvious thing when you get to talking about China, the elephant in the room, is really geopolitics. Now, this is just recent, The Economist's recent views on Biden versus Trump. I don't really want to get caught up in that discussion, but obviously this is going to be an important issue when we talk broader and longer term geopolitics between the US and China. I don't think we'll go into too much detail, but we must just know that this does impact the consumer in China. Next slide, please. Now, for me, if there's one graph that you keep in mind and you take home, it's this one, and in particular, the graph on the left-hand side. This is just stimulus from China over the last few years or a couple of decades. What's important here is when you look in 2008 GFC, what you can see is that post the GFC, one of the primary forces, let's say, for the world and markets and economies to deal with was the stimulus that came out of China. It really assisted to a very meaningful degree to pull us out of recession. Now, this is where we are currently, and remember, we're now at the start of October. And in gray, what we see is the stimulus that is already applied through the Chinese markets. This is the dry powder that still exists. So what you've had is, yes, you've had high levels of stimulus for some time, but you really see China holding on to stimulus. And you actually found this when SARS played out as well. The big stimulus came out maybe 6 months after SARS played out. So what you're seeing is China in a position where they can start to see all the geopolitics and all the nonsense come out, which they're going to have to deal with, and they still have a lot of dry powder to then stimulate the markets if indeed they need to. And what's interesting about a lot of the stimulus that you've seen before, you've already seen China coming out of let's say it's a short-term recession, etc. A lot of this was plans passed last year from stimulus in years before. You've seen, let's call it broader yellow goods being bought in China for that stimulus, plans passed, etc. But none of that happens overnight. That those plans need to happen, and all of that you've seen play out. The big point here is that actually the real stimulus hasn't paid out at all. Next slide, please. Okay, so let's just get on to the consumer, because this is really what Xiaogang and I want to talk to today. And I think what you need to understand when you're thinking of China is, firstly, it's the world's biggest population. As you all know, everyone is connected by phones and they know how to use them. It's got world-class infrastructure, because this has really been the story over the last 30, 40 years, is infrastructure development. So unlike possibly India, the roads work, the rails work, the telephone works, etc. And so that population is able to be quite effective in stimulating the economy when in fact they are given the incentive to do so. So what you're finding with China is, despite the geopolitics, and possibly because of the geopolitics, they can be more inward focused, but this allows them now to be more consumer focused and to get a lot of things right that we'll see in the next few slides. And I do want Xiaogang to talk about this more, but what you can see is revenue growth of e-commerce companies exceptionally good and higher than the US median. Next slide. If you look at TikTok, etc., you can see the growth of those apps far quicker because of numbers, pure numbers, far quicker than, again, US counterparts or other social media apps. So really, once you have a good idea, you can actually implement it quite quickly. The other thing which you can't see on here is that these apps are now less copying and far more doing. The innovation coming out of China is now starting to actually change the way the rest of the world operates with the likes of TikTok, Pinduoduo, etc. Next slide, please. Now, you can also see when you get these apps, and here you can still see Europe is trying to do something, US is trying to do something, but something like food ordering, far stronger, growing very quickly, and far bigger than the US in actually a very short space of time. Next slide, please. And the final slide before I hand over to Xiaogang, and I'm going to leave this so that he can possibly talk to some of this if he'd like to, but you can just see how there's been huge growth. Chinese consumer companies have really profited from that growth. I know people say, is it all real? To a large extent it is, and you will obviously have a few corporate governance failures, which we'll talk to as well, but these growth rates are real, and they are internal and in some cases external with good exports. But these growth rates, and to profit from these, is something that we think in portfolios really stands you in good stead. And I just want to remind everybody, when it comes to A shares, 2% owned by foreigners, the rest is all basically Chinese owned. So a lot of these counters are unique. Now, just to introduce Xiaogang, Christine did a great job of introducing him, and this is one of the most skillful managers in China that I've met. Xiaogang is an old friend of RisCura. He's a phenomenal resource, and I'm really pleased and privileged to actually have him on the line. So Xiaogang, welcome, and I look forward to a wonderful chat with you. I think, please note that this is more your show than my show, so I'm going to ask questions, but I'm really looking for your answers, and I've left some interesting companies up for a little while, because the first question that I'd like to ask you is really, you have made lots of investments in this space, in the consumer space. Why did you choose this sector in the first case? And maybe you want to talk about some of these companies after maybe just a brief few words, if you like, about yourself.
Thank you, Jared, for inviting me for this conference. Actually, 23 years ago, when I started in this business, I was a generalist. So I invest in all those sectors, the mining, the financials, like semiconductors, all those sectors. But as time passed by, I become more develop a core investment philosophy that focuses on long-term certainty of a business. And as a result, I find more opportunities in the consumer-related area. I think in the past 6-7 years, my portfolio 80-90% has been concentrated in consumer-related sectors. I think the reason is that for most of consumer, internet in China is basically, in essence, is consumer-related, because most of internet business is 2C business. For consumer-related business, the end users, they are individuals. And for individuals, they tend to generate stickiness to strong brand name, to powerful network effect, and to high-quality services. And such a stickiness can create certainty for long-term value of a business. So as a result, as time passes by, I tend to avoiding all those commodity sectors or cyclical sectors such as financials, and now avoiding fast-changing technology sectors that the stock price has been driven by product cycle that change so fast. So I think it's also as a result of as aging. When I grew up, I tend to be looking for more certainty in the long term versus be excited about the very new and fast-changing factors of business.
So, Xiaogang, to look at that slightly differently, Do you think there would be a time when you would think these stocks would be too expensive and you would look to other areas? Or would you prefer to balance out into cash? I mean, you may have great investments and let's say you can see certainty in the business, but surely there's a time that things may become too expensive.
Actually, it is not. I think some stocks, they may look very expensive, but market in China is very short-term driven. Even for global investors, they are very focused on the short-term factors. So during the, I think, for example, during the past 10 months, the stock price has been benefit from the virus issue, rallied most. There's still some companies that their fundamental has been hurt by the virus and their performance is not good. For example, I invest in company in the past 6 years. It's called New Oriental Education. It's after school tutoring business, and most of the business is offline business, and they have been hurt by the virus issue because most of the learning center has been closed during the virus period, and they are a laggard in the market. Their peers, the online education, for example, TEL, GSX, they rally a lot. GSX is a company that has been heavily shorted by the streets. And their market cap at one point even larger than EDU. Even the revenue and bottom line is only less than one tenth of EDU. So that shows how market has been very short-term oriented. So we still find a lot of high quality business with long-term certainty. Their valuation is not very expensive. But I agree, there are some business, for example, like the hot pot company, Haidilao, it's a hot pot restaurant chain. The next year, P is like 100 times. And another company is called Haitian soybean sauces company. Next year, P is like 78 or 80 times P. They are very expensive. But we do still can find some good opportunities that's reasonably priced in the market.
Xiaogang, just to talk about...
And from longer term perspective, I think for all those companies, they still have a huge potential to grow. For most of the market leaders in consumer base, I think the best scenario is they have like 25 or 30% market share. If they do not make a big mistake, I think 10 years later, they may have like 50 or 60% market share. And also benefit from the consumer consumption upgrade. Their revenue can grow with ASP as well. So I think if you look at longer term, I think there's still a lot of potential for the share price to go up.
So Xiaogang, you're obviously very positive on the Chinese market. Can we talk about the elephant in the room, the US trade or tech war, and maybe more generally geopolitics, and the impact you think that will have on the consumer? And you can even talk stimulus in this question as well. So I'm leaving it fairly open to you.
Sure. I think if you look back in the past 10 years, China's GDP growth has been, majority has been driven by domestic consumption. Marginal GDP growth, 75 coming from domestic consumption. So China's dependence on the global market has been decreased significantly after financial crisis. And also let's talk about US-China trade war and tech war. I think as 3 years ago when the US-China trade war broke out, China become more and more focused on internal consumption and internal domestic business. They do have some negative impact on China because for the export-related manufacturing base, there will be some unemployment. But since 2012, the absolute number of blue-collar labor start to decline. That's the point. The labor wage inflation in the blue-collar labor sector has been increased in the past 8-9 years by 10 or 15% annually. And most of the young people do not like work for the factory anymore. So even before the trade war, many export-related manufacturing business has already moved out of China to Vietnam, to Southeast Asian countries. The US-China trade war only make the change faster. So I think that negative impact on unemployment issue will be very minimal in China, because most of the new jobs are created in the service sector, not from manufacturing sector. On the other hand, with outside pressure from the US, China will be more, the government will be more liberal and be more nicer to individuals, domestic individuals, and to the private businessmen, because the government knows they need to depend on them. So I think if you look at the government's behavior in the past 7 years, China already built up a nationwide healthcare benefit system. Coverage ratio is about 95% of population. It's the largest coverage ratio in the world. And also, China do a lot of fiscal transfer to the lower level. Because China's population is a pyramid. Large part is lower level income people. So those people benefit most from the income transfer. And also, because China built a very safe living environment, I think China may be the safest, have the safest cities in the world. And the lower part of the people, their future is more promising because their wage increase year by year. I think most of the consumer behavior is dependent on consumer confidence. It's not highly related to the level of wealth. When people feel more positive about tomorrow, they would like to spend more. Not necessarily. I think if you compare the wealth level of Europe and Chinese individuals, I think European families should be more wealthier than Chinese people. But Chinese people like to consume because they feel more positive about future and feel very confident in their government and society. And there is another policy-driven change that with the US-China trade war, and China want to cut down its net export. So China actually in this year built up a duty-free island in Hainan Island. That will attract a lot of the luxury goods consumption from Europe, from Japan, back to China. That means most of consumption of luxury goods will happen in China. That will hurt the retail business of the Europe and Japan. That's another change.
Xiaogang, talking about making things happen quicker, how the particular, do you want to talk about a few companies you've invested in and how they've fared since the virus outbreak?
Okay, I think there's a virus actually did not change the trend of consumer space. Virus actually is just to make the trend happens faster. For example, there are several trends. In most of the traditional consumer sectors, the volume growth has been slowed down very significantly in the past 5-6 years. For example, the beer sector, the Chinese liquor sector. The volume growth all have been all negative in the past 4 to 6 years. And what happened in this sector is consolidation. So the top brand name, the largest players consolidate the market continuously. So before the virus breakout, the consolidation already works out. The virus only helped them, to phase out the weaker companies, to make the consolidation happen even faster. So if you look at the Chinese liquor business, the top brand names such as Maotai, Wuliangye, they are taking market share aggressively from the local players. Is online consumption, not just the physical goods, but also services. For example, physical goods, you can easily understand people are getting lazier and they buy stuff from Alibaba. But another trend is the offline services sectors. Before the virus, many service providers, for example, the high-end restaurant, a hair salon, the supermarket, they are very reluctant to welcome the online service to provide the traffic to them because they do not feel the strong benefit. But when people do not go on street, the online traffic become the only source of traffic we can get. So I think after virus, most of the offline services sectors, they will feel very strongly want to digitalize their business. So I think that the virus helped companies like Meituan to promote their business to the offline services business. That will be a very, very strong trend. And also, if you look at China, if you go to the other services like hospital is digitalized. So we can make a book order with the doctors through WeChat. We can just see the doctor and the drugs will deliver to and a doctor make a description, give a list of drugs, and the drugs will deliver to my home after I see the doctor. And I do not go back to the doctor, see him again for the same illness because I can WeChat him. So things has making the services in the hospital more easier than before. And also you can see online education. More and more kids get used to online education format. So I think all those trends has already happened before, but very slowly, because the established business model, they have some resistance to the new stuff. But after virus, everything has been changed in a fast pace.
I have visions of the consumer sitting at home on his phone drinking a beer. But let's just talk a little bit more about that, because I want to extend. Obviously, this comes with 5G, and so that has changed, and that must be another theme that must be particularly important in how you then compensate for all this demand because people are at home and on their phones. Even if not, if they're moving around, they're conducting themselves in every way on phones, which is phenomenal. But let's talk about 5G and what's happening there. Have you got a few points you want to talk on that?
Well, actually, all the online services I described, they can get done by 4G. Chinese 4G coverage and speed is really, really fast. So for 5G, I think it's like Chinese build highway. They build highway first. There's no car running on the highway, and expect the car will be getting more and more cars to running and get more and more crowded. So there's still no clear business model for 5G to develop. It's just the government want to promote the 5G technology in China, so they ordered the telecom operators to start to build 5G first. But to be honest, there's no very clear business model for 5G yet. All the online service I described, they can all done by 4G.
And let's just go a little bit more physical. Home appliances. Let's talk about that as an industry, along with, let's say, slowing infrastructure build, etc. How do you see that and those consumer companies?
Well, I think it's home appliance sector is also a traditional sector. So it's fit to the overall traditional sector story. It's consolidation story and consumer upgrade story. For consolidation, there's only 3 major players left in this field. It's Grey, MyDear, and Haier. So there's no new competitors coming to play. So all those 3 major players, they control majority of market share. For example, MyDear and Grey control about 70% of air conditioner market in China. And when they control the market, they can upgrade their products gradually. For example, I think the penetration rate of air conditioner is still not fully penetrated. So So for like villages people, many of them, they still do not use air conditioner. Another good example is the washing machine. When a family in China buy the first home appliance, it must be washing machine because they solve the labor pressure of women. And so most of the Chinese family has a washing machine. But the washing machine volume actually in the past 7-8 years didn't increase. But you can see a very clear upgrade from top-loaded washing machine to front-loaded washing machine to washing machine with the dryer's function. And also, you can see, I recently bought a washing machine that's 2 washing machines embedded in one. The top one is for kids, for babies, and the bottom one is for me and my wife, because people feel you should treat babies more sensitively, right? So I think such and that 12,000 yuan, but for like average washing machine, it's only 3,000 yuan. So that would be four times of the average washing machine price. But it's the best seller washing machine in high end because more and more people like this idea, right? So I think the volume of washing machine didn't change, but the ASP of washing machine actually grew significantly in the past 6-7 years. So you can see this happening almost all those traditional sectors. Giving us another example, beer sector. The volume of beer in China has been decreased by 6 years because the population of young kids actually decreased significantly. The young kids in like around 20 years old is the half size of people 40 years old. So fewer people drink beers. You only drink beers when you're young, right? So when you're getting older, you drink the liquor with the less volume, but a higher degree of alcohol. So, but the beer in China, actually 60% of beer still priced around 4 yuan. It's cheapest in the world. And about 35% priced at 8 to 10 yuan. It's around $1. 8 yuan is around $1. And only about 5% is above $1. So you can see a clear trend that the price range is moving from the economy beer around 4 yuan to 8 yuan, then gradually to 10 yuan. So the volume growth in the 4 yuan beer actually shrinked significantly, but the volume growth in the 8 yuan and above 10 yuan grows so fast. So even the volume actually shrinked in overall sector, but you can see a very clear consumer upgrade, consumer product upgrade happening in this sector. It's also same story in the Chinese liquor sector. People actually drink fewer and fewer high degree Chinese liquor, but they drink better and better brand name. For example, if you put a bottle of Mao Tai on the table, your guest will feel highly respected. And one bottle of Mao Tai will solve the problem of 10 people. But if you put another brand name on the table, people will feel less respected. So that is a social products, and it's a very clear trend that is a upgrade.
So before I get on to another, let's call it a hippo in the room, let's just talk about how difficult it is for a European or American investor to see these opportunities given the context. Do you think it's harder for them, harder for those companies? It clearly is, but is the challenge overcomable by people outside of China, or is that actually quite difficult? Have you got any views on that? And how important is it to understand Chinese way, culture, consumer habits, geographies, etc., in coming up with the views on these specific companies?
I think I met with some global investors coming from New York City. I treat them with Mao Tai, and they tastes like gasoline. So they will hate these products. But actually, Actually, when you are Chinese people, you know how valuable is this product. It's not just average consumer staple. It's a social product that lubricate the social relationship among people. So I think the local knowledge about culture and the trend is very important. And also like the WeChat payment, WeChat Pay. You may heard about Apple Pay, but you do not feel a sense that I do not need to bring my wallet anymore because everything can pay by WeChat. If you do not live inside China, you cannot get such a sense. I think even you're living in Hong Kong is not good enough. You may have some sense of mobile payment, but you do not have a sense of everything can pay by mobile. And that would be a big, big difference. But I think for the global investors, when they invest in China, I would suggest them they should be looking at the track record of a business model. Do not believe in fancy stories. If somebody come up with a good idea, for example, the Luckin coffee, do not buy in new fancy ideas, because even a proven story in China is huge. Even you're waiting for that story has been proved, you invest in that, there's still a long way to go. You can still make a lot of money after the story has been proved. So when the story proved, they must have very good cash flow. So back to the basics of corporate finance. Focus on the cash flow. Focus on how management team allocate capital. So that will be focused on free cash flow, right? Management team, for example, China Mobile is a very good business model. Their management team is the top notch in the industry. But they listen to the government, always invested tons of money on social projects. So the way they allocate capital is not good enough for financial investors. So focus on how they allocate capital and focus on operating cash flow and back to the common sense. That would be my suggestion to the global investors. Never buy new ideas in China. I'm not sure all new ideas is fake. It's because all new ideas you cannot have a good sense if it work or not. You cannot follow them very closely. I think, for example, the Luckin coffee, I want to spend more time on that. Most of Chinese people don't buy coffee ideas because I live in Shanghai. Shanghai has the most coffee shop in China. And I know 90% of coffee shops barely make a profit. And I don't believe Chinese people drink a lot of coffee. But why the US or European investors like this idea? Because they drink coffee. So I can make a reverse case. If a US investor make a new venture that says, I want to open a tea shop chain in the States, I would think Chinese people will buy into the idea, right? Yeah. Because most Chinese people drink tea.
Xiaogang, I'll tell you what, I want to come back to Luckin Coffee in a second because there's some issues there I still want to talk about. But can we just go back to the hippo in the room? And I know I'm obviously catching you off guard here, but can we just talk a little bit about Tencent and WeChat? I know there are a lot of investors on the line who are interested in, maybe you can give us your view and maybe even a few words on Alibaba as well.
Sure. I'll put my conclusion first. I like Tencent and I don't like Alibaba. First of all, Tencent has a very high barrier to entry business model. And Tencent's WeChat system actually, on one hand, connect about 50 million merchants. Most of the merchants, they are in the lower tier cities. So for the merchants, even before they use a POS machine, collecting credit card or bank card. So I think that Tencent actually is a nationwide coverage of the merchants. And on the other hand, Tencent's WeChat payment system connects about 800 million users. Daily volume is about 1 billion transactions per day. And compare with Tencent WeChat payment with Alibaba's Alipay, actually Tencent is much more frequently used payment choose than Alipay, because Ali highly dependent on Alibaba has a big ticket size. So by dollar-wise, Alibaba has a larger market share, but by volume, Tencent has a larger market share. But in the monetization on those payment system, Alibaba is more aggressive than Tencent because of different personality of founders. Jackie Ma always talk a lot and want to be a teacher and a leader for other people. So he has been very, very aggressively to take away market share from banking system. If you notice the recent listing of the Ant Financial, actually today Ant Financial just get investigated by the CSRC, because when Ant Financial issue the new shares, they specifically allocate new shares, IPO shares, to the funds that only issued on the Ant Financial platform, to the mutual fund that only issued by the Ant Financial platform. There will be some conflicts of interest. So that tells you the Ant Financial is very aggressive on monetization on this financial capability. But Polyma, the founder of Tencent, he's a very conservative guy. He knows if you hurt the traditional financial industry's business, you'll always get punished by the regulators. So he wants Ant Financial to remove all the barriers on the road. Then Tencent, WeChat will follow. That's the strategy of Tencent. The reason I do not like Alibaba is not because of the Ant Financial, it's because the e-commerce landscape in China. Actually, Alibaba is not the dominant, the dominance of Alibaba has been weakening very quickly. 4 years ago, Alibaba is the dominant player in the e-commerce sector. But now, if you look at the e-commerce competitor, Pinduoduo GMV grew like 100%. JD GMV grew like 35%. The e-commerce inside WeChat mini program ecosystem, last year GMV is 800 billion billion RMB, and this year, first half of this year grew like 120%. So this year GMV expect to be 2 trillion. Compared with Alibaba is 7 trillion. So WeChat e-commerce almost double in this year. And also there's a new format of e-commerce, live broadcasting e-commerce, that happened in the short video platform, such as the ByteDance and Kuaishou. The Kuaishou last year, the e-commerce GMV was about 200 billion RMB, and this year expect to be 400 billion RMB. And Douyin also has a very aggressive plan on the e-commerce business inside the short video platform. But Alibaba, if you combine the Tmall and Taobao, the GMV growth is only like 20%.
And geopolitics and WeChat, is that
their growth is much faster.
Sorry, Shagan?
I think this year, yeah, can you hear me?
Yes, sorry.
Can you hear me?
Yes.
Okay. I think this year is election year. So I think if you think WeChat, their presence in the revenue income from the states, even including all the gaming company they have been investing in. For example, Epic, they have like the Fortnite game, they have 40%, and also they have been investing in the Supercell. Even including all those business, the US income represent less than 2% of Tencent's total income, total revenue. So it's very, very minimal. If you shut down the WeChat business, connection in the States, the only shut down connection between overseas Chinese people with their families. There's no not much hurting on business of the WeChat. Majority of 90+% of WeChat business is domestic business.
So Ketu, has it a growth in earnings over the next year in Tencent?
Our model,
We won't hold you to
our
it.
model shows which side. Our model shows Tencent next year. Sorry.
I said we won't hold you to it, but any kind of growth forecast?
Can you hear me?
Yes.
Okay. Our model shows next year earning growth 28%, and the year after that 27%. But if you excluding all those investments, Tencent has been the Meituan, Pinduoduo, give that a 30% discount, and excluding that valuation, next year P is about 27, and the year after is 22. So Tencent's valuation is definitely not very expensive.
Yeah. Thanks so much, Xiaogang. Okay, so let's go back to the corporate governance thing. We all know the story behind Lucky Coffee. Can you talk about the context of hot pot? I mean, how does one make sure that you're getting the sales that a company is saying it's getting? And does that affect hot pot? Why would you be more certain of hot pot's sales? And you can also describe the model. I'm not sure if everybody knows. But essentially, they're selling hot pots, and it's probably linked. So you just go and you go to the hot pot place, you pick up your meal, and off you go. But how do you know for certain that its growth numbers are also as reflected in the financial statements? How do you kick the tires on something which is as difficult, I would think, as Luckin Coffee?
Okay, I think Luckin Coffee is a totally new idea. There's no the only coffee chain in China that make profit is a Starbucks. All other coffee chain, they are money losing business. But for hot pot, I think they do not make fake numbers. The only problem with the Haidilao, the hot pot company, is the future potential of growth and the certainty of the growth. I think the past financial statements is definitely it's very real. But the problem is the future growth. That's the reason I do not like the restaurant in general, because most of restaurants in China, they are fashion-driven business. You need to change your format and your menus very frequently to attract customers. But Haidilao is very special because its taste is not its selling point. Its service is the selling point of Haidilao. In general speaking, Chinese restaurants, they are very good taste, but the service is really not good. But Haidilao creates a culture to service people better. So they can make people feel very respected and feel very happy in a restaurant. So, because there's many hot pots in restaurants in China and a different taste. So if you are really a good hot pot lover, you may not go to the Haidilao, because Haidilao, that taste fit the mass market, is not fit the special taste of people. But I think the Haidilao future growth is very strong because most of the competitors, they still focus on the taste, not focus on service. And the service is very difficult to copy. Haidilao have a very different incentive system. Their staff take away about 30% of the revenue as the compensation. And their rental cost is only about 3 to 4%. But for most of the restaurants, their staff cost only about 10%, and the rental cost is about 20%. So that means Haidilao create a model that I gain traffic to the shopping mall, and the shopping mall charge me very little on the rental. But as service, I give my staff the best payment in the industry, and they service people with smiles, with real smiles, not fake smiles. So that's their model. But I think the uncertainty is coming from, for example, in the Shanghai, the first-tier cities, when more and more restaurants, they can provide very high-quality service as well. Haidilao service is not so outstanding anymore. So if you see the tables per day for Haidilao in the first-tier cities, tables turnover per day actually start to decline in the past 2 years. But they have been aggressively to penetrate in the lower tier cities. That creates a lot of business for them. So I think Haidilao's growth will continue to be very strong, but I cannot justify that next year 100 times PE.
Xiaogang, I'm going to extend this topic, if I may, just to areas of governance in general on Chinese companies. I think it's a big fear for, obviously, and many people speak about this. So I'm going to try and be more practical. So just in terms of ESG in general, we can talk about governance, and then we can also talk about the environment specifically today. But on governance, what landmines are you trying to avoid, and how do you go about trying to avoid them? And then on environment, what are your views there? How have you tried to affect the environment with companies, and how are you, with those companies, attempting to be an agent of change? Because it is a big issue for Western investors, and we certainly see the high level of progress that you get in China. But what are you doing as an investment manager to be, let's say, that kind of agent of change?
Okay, I think it's a very good question. If you're talking about corporate governance, I think overall, the corporate governance level in China is not at the same level as in the States or in the European market. But you can see a very clear trend. The corporate governance has been continuing to improve in China. I think about 10 or 15 years ago, when everybody has been focused on competition, sometimes like cutting through competition, and everybody concerned about tomorrow's survival. Nobody really care about governance, because everybody use a lot of techniques or tricks to make sure they can have some advantage over its peers. But now, when most of traditional sectors, the supply side landscape has been very rational. There's not much competition coming from the new commerce, because most of traditional sectors in China, the volume growth has been declined to low single digit or even negative. And when you become a market leader, you become more and more focused on corporate governance. And also, I think for investors, corporate governance, the critical part is if you respect the minority shareholders' value. So I think when the companies do not need to invest a lot in the capex, you can see more and more companies pay very decent dividends and even buy back shares to compensate, to reward the minority shareholders or financial shareholders. But still, there's a lot of issues with corporate governance in China. Particularly, there's two things, two groups of issues. First, SOEs. Because for SOEs, their management team, the career ladder is more focused on the political part, not on business part. For example, the CEO of ICBC, the largest bank in China, we are joking the first day when they step into the ICBC, they are thinking about the day that they have been leaving ICBC, because when they left ICBC, they get promoted. So they're never a businessman. They're always a political man. So when the government says, okay, this year, 2020, I need the banks to subsidize the real economy by 1 trillion, the banks will listen to the order, right? So I do not like those kind of corporate governance, because they may take some social responsibility, but it's not good for financial investors like us. But it doesn't mean that for the companies that majority stake owned by private businessmen, they are going to have a good corporate governance. There's many cases that private businessmen take away the interests of liscos and put them in their own pocket. There has many cases in that field. So I think you should be very, very alert to the corporate governance. The only way that you can avoid the mistake is that you focus on track record. Focus on what they did in the past. Did they had already showed their respect to the minority shareholders or not? Don't listen to what they are talking about. They're always talking about good corporate governance. But look at what they did in the past. at least 3-4 years. I think the ESG, if another topic is ESG, the company actually I invest, as a result, most of them has a very high standard of ESG. And in the past 7 years, they outperformed the market strongly. So that tells you a story that ESG, ESG standard company outperform the market, also true in China as well. I think the reason is that for most of the high quality companies, when they become very strong and they become a dominant player in the industry and become play a very critical role in the country, in the society, they will be more focused on their reputation, on their customers, their reputations on the society, and also their reputation from the government, and also reputation from their investors. Because with the help of the mobile social media, if a big company make a small mistake, they'll spread out on the social media, and they'll hurt their business a lot. So I think the high ESG stand is the result of a high quality company. It's not like if you have a high ESG standard, you become a very successful company. I think most of the time, when you set up very high ESG standard, you may have some disadvantage to your peers in a very competitive world, right? So I think when people become a very strong, when company become very strong and become a dominant player in the society and also in the consumer's mind, they will be very value of their reputation. And also for Chinese government, actually, they do promote a social responsible model for companies. In China, the government don't like the idea of maximizing the shareholders' value idea. So I think for many high quality companies in China, if they are successful in China, they are very sensitive to balance the interest of shareholder with the interest of the social responsibility. I think they live in a world that they have take responsibility to the customers, their suppliers, the employers, and I think if they borrow money from banks, and also responsibility to banks, and also responsibility to the environment, and also responsibility to government. It's also very important. So doing business in China is not easy. There's no clear rule on how you should do business in China. But if you cannot balance all those factors very successfully, your business can easily get failed, because social media in China is very powerful. If you make a small mistake, you are done.
Okay, thank you so much. I'm going to ask one more question, and this is a 10-second answer. The impact of retail on alpha, and also give me an estimate of what you think, do you think alpha is sustainable not only because of information inefficiency, but also because of the retail investor? And is that who you are essentially betting against? And how long does that play out? 30 seconds, and then we must wrap up. We've stolen everybody's time.
Okay, I think it's definitely true. It's not just retail investor, but it's also global investors. Both of this group, they are very short-sighted. I'll be very straightforward. For retail investors, it's very easy to understand because they always want to get rich very quickly. So they will chase very hot stock, like Tesla chain this year, or semiconductor. But for global investors, because they always look at China from top-down perspective, there's always a lot of issues in China. So when there's an issue in China, for example, US-China trade war or Hong Kong social unrest, this year, election year, there's a lot of pressure in China. They will feel China is very weak and they will dump Chinese stocks. Maybe they have a good taste with us on the fundamental of companies, but they do not have long-term conviction in China. So they tend to like the short-term news, fundamental news. They tend to look at China from top-down perspective, and most of the time, the top-down perspective is negative on China. So I think my successful is like a philosophical benefit from all those very short-term driven investment behavior.
Wonderful. Shagang, as always, an incredible chat. Thank you so much for that whistle-stop tour. I'm going to try, you've already answered one question. I'm just going to see if there's one more question that I could possibly answer. Here, there have been talks about China's economy transitioning from industrial to service-based economy. How is that working out? And there are concerns of government debt at 55% of GDP in 2019. What are your views on that? Just those quick answer, because I think we kind of dealt with it already. And then we're going to wrap up.
Okay, I think from industrial-based to the service-based is talking about employment side. Because for most of the economy, employment is the critical issue. So I think most of the new jobs is generated from the service sector because the young kids doesn't like to work for factory anymore. And as people getting richer and richer, they spend more money on the services. For example, for myself, I do not spend lots of money on air conditioner or big TV screen. I spend money on fancy restaurant, on good show. So that's a trend from a demand and supply side on the service sector. Regarding the debt, I think there's a very good piece of research paper from Ray Dalio of Bridgewater. He said, when your debt is labeled in your local currency, it's not a problem, particularly when China's banking system is a closed banking system. Capital market is not a free flow capital market. It's not a big problem.
Great. Shagang, that's it. It's been an absolute pleasure. As always, your insight into your own local market is impressive, and I think you've given a lot of people food for thought. If anyone has any questions or queries, you're welcome to email us at RisCura, but thank you so much for everything you've provided. Over to Christine.
Thank you, Jared.
Thank you for having me here.
That certainly was an eye-opener for me. I had no idea just how important domestic consumption in China has become. We'll be making this recording available online and we'll be sending it out to the participants if you'd like to watch it again or if you'd like to forward it on to your colleagues. If anyone wants to get in touch or wants to chat about how to put money to work in China, please feel free to get in touch with us. Thank you very much and we hope to see you again at our next webinar. Goodbye and stay safe.